Welcome to this video today. It is 14th of June, Wednesday, 5:45 AM GMT. Up early today, hoping we're going to have an active day. Now I want to, in this tutorial, look at two chart setups. We'll go to the charts in a moment. They are Euro CAD and USD MXN. What we're going to be doing is looking at the technical setup and using the COT, Commitment of Traders report, in two different ways to back up our view of the technicals and give us skewed risk to reward, i.e. very low risk with high reward potential. Now, if you're not familiar with the COT, and you want to learn more about it, I'd strongly encourage you to just click on the link beneath this video and you'll see why it's such a valuable tool. Now, in brief terms here, what we're looking for is speculators, i.e. non-commercials, to be heavily opposed to smart money commercials in a currency pair. And if that occurs, we want to go with the commercials. Now, two types of setup that I want to look at today. In Euro CAD, we looked at it at the weekend. I also did Euro USD and Euro JPY. No change to my view in the first two pairs. Euro CAD has gone nicely for us. Said we were short at 151.60, had a target of 148.30, got down just a touch 148. So it gives us 330 pips of profit, which is a really good return. Now, that trade, of course, went right. Any trade can go wrong. Now, if that trade had gone wrong, our risk reward was still good. So it wouldn't really have mattered. If you trade with the COT, you are going to get good risk reward trades. Now, that one appealed to us at the weekend because the divergence between the groups was the biggest on the report. So you're looking for a break in favour of the commercials and for, non-commercial speculators to get run on stop, i.e. they have to cover. Now, in terms of USD MXN, on last week's CFTC net traders, the rate of change was the biggest on the report, not the divergence. But you can trade rate of change. Rate of change is just simply when the groups are basically adding to their positions really quickly and obviously opposing each other. Now, in terms of USD MXN, of our CFTC trades, I'd say it's been the worst this year. We've had two losers, one winner, one break even. Looking for the one today to hopefully give us a really good profit. Now, even if it doesn't, it offers, in my view, fantastic risk to reward. So what we're going to do now is we're going to go and look at the charts. We're going to quickly look at Euro CAD and then we're going to look at USD MXN. Now, in terms of USD MXN, yes, there is a wider pip spread on it. But in terms of the profit potential in this one, you'll soon cover that if, of course, it goes to plan. Right, let's look at the charts. We are on the Euro CAD daily chart. Obviously, we looked at the weekend. I just want to go through it before we move to USD MXN, just to give an illustration of what we expect in the next pair. Now, in terms of the weekend, we noted just very quickly for any of your CFTC net traders, non-commercial speculators 6.8 to 1 in terms of longs over shorts. Commercial smart money 5.6 to 1 in terms of shorts over longs. Ratio or divergence between the groups 12.4. That was the biggest on last week's CFTC net traders, and that basically sets up a low risk, high reward trade. And we noticed, okay, there's the 152 level, which is obvious resistance. Now, we were on this candle at the weekend, but what's occurring here is that move up there, which we thought was exhaustion, is basically the non-commercials trying to push it higher, the speculators, okay? Can't do it. You get another poke, another poke. It's losing momentum. It's losing it on this one. This is actually where we put our position in, 151.65. Then at the weekend, we've sliced out the 20-day moving average. So you can see these three candles there just lost momentum. Okay, now in terms of what we were saying at the weekend, you're below the 20. Okay, you come off resistance, and obviously you've got heavy non-commercial spec long position in there, and that's basically vulnerable to a stop it. Now, we set the target down here, okay, at 148.30. She goes down to target, okay. Now, this here is just basically the speculators getting flushed out on stop. It happens quickly. It's a nice fall. Yeah, I was saying at the weekend, just wait. Get away from that 20-day moving average. If you wanted to be really safe, you can come in through 150. You'll still get some decent pips out of it. So yeah, that basically stops getting run. If you look, where you can get a stop run, okay, and I'm going to show you obviously in the USD MXN in a moment. Another one, get a decent risk to reward trade. Just where do I think it's going to go now? I think we could probably bounce a bit back towards the 20. Should be a sell. Take out that tail there. Saying at the weekend, I think we'll just go down and fill the gap. But yeah, I'll update that in the member centre. But I just wanted to do it here just as an illustration of a trend running out of steam. And obviously, yeah, speculators getting hit on stops. So let's move over now to USD MXN. On the US dollar Mexican peso daily chart, and in terms of Euro CAD, that was the biggest divergence last week between non-commercials and commercials. Now this one is the biggest rate of change, which I'll explain what I mean by that as we just look at the CFTC net traders positions. Now, yeah, last week what we had was non-commercials 3-1 in terms of shorts over longs, which is not an extreme position. But they've added in 20,704 shorts for last week, and that is a lot of shorts. It's the biggest speculative change on the CFTC report. Commercials 2-1 in terms of longs over shorts. Again, not really an extreme, but they added in 21,782 longs for the week, which was their biggest move also on the CFTC net traders report. So we've got divergence of 5.2-1, which, it's okay, but it's not extreme. But it's this rate of change that interests us. Now, in terms of on the chart, I've kind of isolated this level here. This is where the commercials do a turnover of positions. They've been short, and they start to basically move their hedges and go long, okay? And I've noted it here. I haven't put the weekly chart up. But they've been short, until they turned over from 22.50 to 18.50. That is a big move they caught, okay? Now, when they were basically short, of course, non-commercials were long, okay? So the commercials obviously come out on top. Non-commercials get run on stop. Now, what we've got, in the last couple of weeks is the non-commercials really coming in to sell the USD. And I've highlighted the candle on the report here, okay? So this is where the commercials and speculators speed up. Sorry, I put and selling, I mean selling and buying. Now, what we can see is look at the size of the candles. They're tiny, okay? They're not very big at all. It's like a grind lower, okay? And now obviously we're early in the morning, so I haven't seen much activity on this last candle. But I think what we're going to get is basically a stop it. A lot of the specs are coming in with fairly tight stops, and I think they're going to get run. I mean, I've seen several reports in the media saying, the USD MXN is going down to 17. There's nothing to stop it. Well, I think there might be. I think this sort of divergence between the groups is significant. So let me just give an idea of where I think you could come in. Well, I give it a little bit of room. I think through here, the candle's very small. I hope you can see it. But through the 18.20 level, I think, if we do that, I think that'd be a good level to come in. You're clearing out yesterday's candle and the body of the candle the day before. And obviously you've got a slope as well. If I can do it, hardly see the candles. So let that double trend line get, taken out. Then I think there's going to be stops here. They're going to get run. I'd normally look for the 20-day to hold. This time I wouldn't. I'd look for a run up to about 19.20. Okay. Sorry, if I could draw a straight line. There we go. So plenty of upside if we break up. Where would I put the stop? I'd be behind the 18 level. So I'd probably be about 17.94.50 on this one. Yeah, at the end of the day, what you've got here is a really good risk to reward. If she runs, she's going to run on, in my view. Also, you can look at the end of the day. If she's not a strong blue candle, you just cover her out, okay? Now, from our perspective also, you look at that stochastic, it's totally flat, which is a reflection of this low volatility. Yeah, you've got 0 on the fast line, 1.76 on the slow, okay? So it's going to take nothing to turn that up, just any movement to blue will. Got the RSI sitting flat as well. Basically, it oversold. So what you've got from our perspective here is a really decent risk to reward trade. You know, if we're blue, strong at the end of the day through that 18-20 level, hopefully she should run on to the upside. Now the swap on this is pretty severe, but you're not looking to hold this one for too long. You're going to get a result quickly, either good or bad. Hopefully it's a good result. I'm going to go for this one. So I'm going to go, see how this one goes. But from the perspective of risk reward, that's all you're after, a decent risk reward. I think this one looks a good trade.